Joining us now in a CNBC exclusive is IAC CEO Joey Levin. Joey, thanks for joining us. So what happened here? We thought we were starting to see some green shoots in advertising.
We are actually seeing some green shoots, at least in our advertising business. We've turned around profit this quarter. Second quarter, we had profit up a hair year over year on that business. And our outlook for the second half of the year is to continue to improve. I think people we really focused on this back to basics theme, and that generally seems to be working. And we had, even in the month of June, we had a little bit of growth. I don't know that we'll hold on to that growth in Q3, but Q4 looks pretty good from a growth perspective for us.
I think it was the ad spending in the Dotdash Meredith that had people wondering if we actually are seeing a real turnaround in ad spending.
Yeah, I mean, I don't think that the ad market overall is strong. I think the ad market overall is still in a not great shape. I think it's stable, but I don't think I don't think there's real signs that it's improving. But some of the performance marketing stuff is working pretty well because the consumer spending seems to still be working pretty well. I think that probably the disappointment was more focused on our Angie business.
So what's the story there? When does that return to growth?
Yeah, I think 2024 is when Angie returns to growth. The story for this year on Angie has been getting the product right and getting the customer experience right. And we've made some changes in the business. We've made some changes in some demand channels. And those were particularly pronounced in Q2. I think, again, on the profit side, we're up meaningfully year over year in profit in Q1 and Q2 at Angie. I think we generated $55 million of cash year to date at Angie. We're up $110 million of cash year on year first half at Angie. But, the thing will be getting back to growth and getting back to revenue growth, I should say, not profit growth. And I think that happens in 2024. And 2023 is really a rebuilding year to get the product in a place that we're really excited about and our customers are really excited about. And we're starting to see it on the pro side. The Angie business serves both homeowners and service professionals. And what we're seeing on the service professional side is they're sticking with us longer, they're paying longer, they're getting happier, and that means we're moving in the right direction with the product.
Joey, hate to pin everything to the writers and the actors and labor strife in entertainment, but 100 days today on the writers, and I wonder if it goes through year end, if advertising really has to deal with bigger questions about demand from that business, from the media business at large.
Yeah, for sure. The strike is bad for spending on entertainment advertisers. We're seeing that, and I expect that'll continue as the strike keeps going. That's not a good segment for capturing ad dollars right now. There are better segments, but that's not a great one because of the strike.
Right. As for consumers, I mean, we are in a period now where watching inflation roll over a bit, wages are sticky, so you got some real wage growth. Isn't that a positive driver for consumer spend, at least for the next few months?
Yeah, look, we'd love to see advertisers catch up with that. That hasn't really happened yet, but generally what you said is true. We're seeing that our businesses that have exposure to consumer spending, we're involved with MGM Resorts. We're involved with Turo. Those are dealing with consumers directly, and we can see it on the performance marketing side and product purchases that happen through Dotdash Meredith's platform. Those things are all very strong right now. The consumer spending is strong. I don't know whether it lasts forever, but it's certainly what we're seeing right now is strong.